Hi, I'm Sapan Ghai, Chief Commercial Officer of Sovereign Metals, which is listed on the ASX as SVM and on AIM as SVML. We are developing the Kasiya project in central Malawi, which is the world's largest rutile deposit ever found, and coincidentally, one of the largest graphite resources in the world. We're looking to develop one project, two critical minerals coming out there, and we're doing that alongside our very new strategic partner, Rio Tinto PLC.
Rio Tinto PLC have just got serious about this $40 million, or just over $40 million dollars worth of investment into your company. What are they after? What's exciting? The rutile component, the graphite component, or is it equally important?
I think we've made it pretty obvious that as soon as we found out that we had one of the world's largest rutile deposits, a lot of people in the in the titanium space, in the titanium dioxide space, started knocking on our doors, and so we just wanted to start thinking about, right, this is huge, this is big. Who do we want to have as strategic partner who can help us technically, potentially financially, with the marketing, et cetera, et cetera. So to answer your question, Rio Tinto came in for the rutile. While they were looking at the rutile, obviously we were doing some work on the graphite. The graphite got very interesting indeed. Just to put some context to it, so Rio Tinto, out of its titanium dioxide business, produces about 1.2 million tons of titanium dioxide. We're looking at about 250,000 tons of rutile coming out of Kasiya based on our current scoping study. And then on the graphite space, Rio Tinto's made no secrets of its interest in the battery mineral space. It's built a battery minerals department out since 2021. And they've even gone ahead and built a battery testing plant in Melbourne, where they say they'll be using their own battery minerals within batteries to see how they operate.
Right. Okay. So obviously the deal terms are kind of obvious. They're in the release that you've put out, and I think you've gone shooting past the 10% premium on the 45-day VWAP already. But let's talk about what this particular partner represents for you guys, because their balance sheet compared to your balance sheet on a project of global significance possibly changes the economics significantly. You've been focused on 30% of the project so far. They're probably going to have a different view on this. So, have you had those conversations? Will you have those conversations?
Look, we're looking to have those conversations, and we will have them as we approach the DFS. Currently, our PFS is in the pipelines to be announced to market in the next 6 to 8 weeks. Following that, we'll get into the weeds on the DFS and the scope of the DFS with Rio Tinto. There's a technical committee that sits over what that DFS is going to look like, and there'll be 3 members from Rio Tinto within that technical committee. So no doubt they'll have their view of what the potential of the Kasiya project could be.
Right, but you know where I'm going with this, and I kind of, people listening in, watching this, reading about this are going to have the same thoughts, which is, if you've been focused on 30% of the business, and please take this the right way, as a small junior relative to the size of Rio Tinto, they need to go big, and they need to go big kind of quickly. So is your expectation that they'll be wanting to look at review the data that you've been producing so far, and will this sort of delay things any in terms of having to get more information about how to get that scale sooner?
So I think let's answer that in 2 parts. The first part is, obviously this is Rio Tinto. They don't make these types of strategic investments unless they've done a lot of due diligence already. So they came to site, they've seen the project, they had been in a data room looking at all our data, including our geological data, how we're looking to develop the actual mine. A lot of work around social responsibility, environmental, around permitting, etc. Before we even got to this stage of signing agreements. From here, it's very much so everyone knows what stage of project we're at, right? We're at the pre-PFS coming out in a few months. We're not at the stage where we can switch switch everything on and off we go into production, which is where the likes of Rio Tinto like to operate. So for us, it's very much a case of how do we get to where we're to that point from where we are today, alongside Rio Tinto helping us in that fashion.
Right. Okay. So the money has, well, it's going to help you, and I think it's predicated on you delivering a DFS, right? So time frame to DFS. Are we once the PFS is out in the next 4, 6, 8 weeks?
I think 6 to 8 weeks.
6 to 8 weeks. Okay. You're going to kind of skip the feasibility stage, go through to definitive. Is that because Rio's on board, or because they're comfortable enough to kind of skip to that stage? And when are you expecting to deliver that?
We were always going from a PFS straight into a DFS. Obviously, we already did a lot of work in enhancing what our project could look like between scoping study and enhanced scoping study. And we like to think that we've done the enhanced scoping study to quite a decent level of granularity. So working towards the PFS hasn't been too arduous or difficult for us. In terms of the DFS, look, we guided that we were hoping to get that done by the end of next year. But obviously, it's all up for debate right now in terms of where we get to. Obviously, our strategic partner would like their input into what that DFS looks like. But I'm pretty comfortable as a management team and our technical committee and the guys on the ground. We can deliver.
Right. Okay. So they're coming in and sort of delivering sort of technical and marketing expertise in terms of exposure to the market, which I guess opens a lot of doors for you, which is again can be useful in terms of having the right eyes on you, because again the junior space has been, well, it's been a tough couple of years for most junior companies, but when it comes to the sort of the back to this agreement, you've got a few little clues in there about intent, and if those things are taken up, like the option, for instance, the option to move to 19.9% shareholding. Those, to me as an investor, look like clues as to Rio Tinto's intent. If the money which they put forward today wasn't enough, this week, it wasn't enough. What are the other kind of mechanisms that you have put in there to kind of, I guess, either signal to the market and give option to Rio Tinto that we should be looking at? What's important?
Yeah, so just talking about the actual percentages themselves first. Rio Tinto wanted a minimum of 15% of this project. Otherwise, it wouldn't make sense for them to put in the time and effort that they intend to place on developing Kasiya and getting it through the DFS. So there's your 15% initial investment. The 4.99% options take us to the threshold under Australian Takeover Code before Rio Tinto would have had to make a full mandatory bid. So there's your reasons for those percentages. Going from those percentages into some of those other options you talked about. So Rio Tinto has the option to become operator of the project, and they have the right alongside that to 40% of the product and marketing that. Now we have what's known as the investor end date within the agreement, and that's within the announcement as well, which says if Rio Tinto within 90 days of a DFS being announced do not exercise their option to become operator, then a lot of their rights and ROFRs fall away. Now those 90 days can be extended by another 90 days within writing, but that probably encapsulates a bit of the time frame around this agreement and what we're hoping to do.
Right. Okay. So that's quite a big deal, actually, and obviously that's subject to them holding, at least I think you talk about 10% of the stock and not be selling this thing off. If they choose not to move forward, obviously they continue to hold equity, and the ROFR is going to fall away. What does that mean for the company in terms of optionality of other maybe mid-tiers coming in rather than these sort of £800 gorillas? I mean, how do you play it?
Look, Rio Tinto were one of a number of strategic partners out there that we that both came to us and we have thought of ourselves. Ultimately, Rio Tinto's huge in titanium dioxide. It's huge in, or is becoming huge in the battery metal space. They already have had discussions about, decarbonization and low carbon supply chains with the likes of BMW, Ford, Volvo. So it's something that we as a junior don't really need to do at this stage when it comes to our graphite and the whole lithium-ion battery space. Now that's going to end up in. So that gives us a lot of kind of tick boxes on that front with Rio.
Right. Okay. And just on the kind of the ROFRs, because you obviously got ROFRs on the equity and future equity raisings and project interest as well. Is to what extent? And I appreciate this is an agreement between two parties, and I'm not necessarily, you don't necessarily, or Rio probably don't necessarily want the granular detail out there in the marketplace. But I just, again, coming back to this kind of optionality in terms of how do I read this story moving forward, because you're kind of going to move through the next few phases quite quickly. I imagine in the next 12, 18 months that DFS is delivered and decisions have to be made by Rio. But in terms of between now and then, in terms of those ROFRs, those rights of first refusal, can you tell us a little bit more on the equity raising, the project interest level?
Sure. Sure. So Rio have a right of first refusal on any if any third party decided to make a bid at project level on the company. If we were to look for future equity capital raisings and future issuances of shares, they have a right of first refusal up until their 19.99% threshold on any of those. So those are the two main ROFRs within the within the.
And there's a bit I'm interested in those Sapan, which is what happens if there is a future equity raising? Because obviously you're going to be working together. There'll be board seats, observer seats, etc. In all of this, and technical committees sitting together. So you're tight knit. What happens if there's an equity raising? Clearly, pro rata up to 19.99 makes I guess in terms of regulations, that's what they got to do. Is there any scenario by which, before the DFS is delivered, they may decide to pull the trigger? Because a DFS is a confirmation of the data which you guys are going to be finding, but it's easy to work out, and all you companies are able to kind of analyze the data very, very quickly before you kind of deliver a kind of full DFS. Is there any scenario under which Rio could move quicker? Would they be allowed, and what would that trigger?
There's no mechanism stopping them from doing that. So it's a completely viable, potential option. With respect to any future capital raisings, I mean, the question that we've got to ask ourselves is, why would we do them now? Right? Because $40 million from the first tranche, or this initial investment, plus another $18 or so million from the second tranche if they decide to exercise their options, should be more than enough for us to get to the end of the DFS. I think we've guided that it'll cost anywhere between $40 to $50 million to do a pretty comprehensive DFS and all the environmental work, etc. To and the permitting work to get Kasiya to an FID, essentially. So really, we're looking at $60 odd million or close enough for us to be able to do that, which I think it should be enough.
Should be enough. Let's not use the dreaded words "fully funded." Okay, but I'm just looking for these clues. Is what I'm hearing is clearly the board and your shareholders presumably would not want you to kind of give this away cheap. So if the options are exercised, the $60 million is enough to get you to a DFS where you should be able to demonstrate the value of this thing. Clearly, with the previous economics, like PEAs, and obviously whatever you present with a PFS will suggest a number of a certain scale, but the DFS will suggest, with a little bit more certainty, the economics around this thing at a scale you will determine. So there's no rush to offload this to anyone. There's more value to be had. Is that what you're saying?
Yeah, I look absolutely. Whether you just look at us as, last week we were a risky project in some people's eyes. There was the financing risk. How was lowly old sovereign metals going to build this? There was the operating risk. How are a bunch of guys out of London and Perth in Australia, plus a small team in Malawi going to build this new, once in a generational find project, and how are they going to get it to into a supply chain and an ecosystem that consists of many blue chip names, some I've talked about, and others like the Chemals, etc. of the world. Well, I think having Rio Tinto on board, and this was one of the key key reasons why we thought there's a lot of rationale to having Rio Tinto come in as our strategic partner, that they unlock all of that for us.
They do, and it's hugely de-risked now. Look, Sapan, I appreciate you coming on and talking it through. You've got a bunch of stuff, PFS coming up in the next 6 to 8 weeks. Look forward to seeing that. This feels like real people building real business. And hopefully we can see the market appreciates that, and you kind of get the credit for that in terms of valuation too. So appreciate your time today. Stay in touch. We'll see you soon.
Thank you.